Ajinomoto started in 1961 in Malaysia as a monosodium glutamate or MSG producer. The group today has two business segments. In 2024, the consumer segment accounted for most of the revenue, but only 21% of the profits. The industrial segment, which serves the food industries, contributed most of the 2024 profit. The food seasoning market served by Ajinomoto is a mature one. In 2024, Malaysia accounted for 57% of its revenue. Most of the balance came from the Middle East and the rest of Asia. Over the past 12 years, profit after tax had a higher growth rate than revenue. This was because profit was boosted by two land sales, one in 2017 and the other in 2024. As such, it is better to look at the NOPAT. This grew by about 8% over the past 12 years. But it was not a straight line growth, with declines in 2021 and 2022 due to COVID-19 and the higher costs, but it recovered in 2024. Operating returns trended up to peak in 2019, but declined since then, where the 2024 levels were lower than the respective 2013 levels. While it had operating profits every year, the contribution margin over the past few years were lower than that in 2013. This is also a company with high fixed costs. On a global scale, Ajinomoto is a small player in the seasoning industry where it had lower growth rates. I would rate Ajinomoto return on equity and EBITDA margin performance as average compared to its global peers. Ajinomoto is financially strong. It has a strong balance sheet as reflected by its debt-equity ratio and cash performance. It has a low reinvestment rate with a good capital allocation plan, where its cash flow from operations was sufficient to cover its capex. The NTA of Ajinomoto was lower than its market price as of mid-June 2024. I estimated its earnings value under two scenarios. Scenario 1 is based on the past 12 years' performance, while Scenario 2 took into account the new plant. There is more than a 30% margin of safety under Scenario 2. Ajinomoto is a profitable business. It is financially sound. Its other positive points, together with its 30% margin of safety, makes this an investment opportunity. The information presented here is for educational purposes only. For more details, read the blog article. Thank you.